If you were thinking about Philippine condo investment in 2021, there are a few things that it's really important to consider. Obviously, right now, this is a bit of a disjointed time for the market. COVID-19 has really impacted home prices, and you're seeing them, especially in the condominium sector, fall after years of constant growth and increases. However, not all segments and not all locations have been affected equally. And in fact, you're seeing some growth and some price increases if you look carefully. Additionally, we're seeing a lot of experts remain optimistic about the long-term prospects of the Philippine condo market in general. The foundation of the market still remains strong, namely, there's still going to be demand, and it's really looking like a matter of if and not when the sector recovers in full. That being said, if you're thinking about investment this year while prices may be lower, I think it's important that you take note of a few things that we're going to look over right now. The BSP's Residential Real Estate Index found that condominium prices in Metro Manila declined in both the third and fourth quarters. Of course, this was the first time in 5 years that prices had actually decreased. Now, you may be thinking to yourself that this is a time to sit on the sidelines, or it might be a good just postpone the decision for a little while, and it's understandable you may think that. But there is one sector in particular that continues to perform well, and that is the luxury condominium segment in Metro Manila. JLL found that the luxury condominium segment in Metro Manila proved to be resilient last year, even while other sectors were struggling. This was actually corroborated by research from Colliers International Philippines, which found that the number of luxury units scheduled for completion between now and the end of 2020 were nearly all sold out. A total of 86% of the pre-selling units that would be available in those projects were already off the market. Ultimately, there's a limited supply of luxury condominium units in Metro Manila, and even while developers are still launching projects in this sector, this is probably going to be the strongest one in the short term, and the long-term prospects also remain quite good. If you want to invest in a condominium in Metro Manila, the luxury segment is probably the best bet at the current moment. There's a lot of uncertainty, as we'll get to in just a second, that really should influence your decision. So yeah, if you want that investment, definitely consider luxury condominiums in Metro Manila, but maybe avoid mid and lower end properties. Rents prices for low to mid-end condominium units in Metro Manila in particular have been declining noticeably towards the end of 2020. This has a lot to do with the impact of COVID-19 and in particular what the new normal and work from home measures are bringing to the market. Basically, more people have realized that they don't need to be located in the city center and that they are finding more affordable, larger, and more attractive properties in suburban areas such as Cavite, Laguna, areas really all around the national capital region. That has put strain on those mid-level unit prices because simply put, I mean, it's really people are choosing between living in a development in a 2-bedroom or 3-bedroom house and a lot and having lots of green space around, or an inner city condominium. Of course, the legacy of what work from home is going to mean is still a bit murky at this time, but really I think it's important that if you're considering condominium investment in the Philippines this year at least, to take note of these trends and see where it leads to in the future, because I think there's just a lot of uncertainty, like are people going to return to those urban condominiums, or are they going to keep living in suburban areas where maybe they can have a house that's pretty much at the same price point? And that's the important thing to note here. It's not that they're spending more money, it's just that your money goes a little further in these suburban locations. While condominium investment in Metro Manila remains very competitive and there's a little uncertainty surrounding the market there outside of the luxury segment, it's a totally different story in Cebu, where there's strong demand for housing, and many experts believe that the Cebu condominium market is going to be relatively unbothered by the lasting impact of COVID-19. There are two key factors responsible for driving this residential demand in Cebu. Firstly, home prices are significantly less here than in Metro Manila. That's obviously very attractive from an investment standpoint, where you may not want to purchase a condominium in a place like QC or the Fort. It's going to be, you're spending more for less. Now in Cebu, you can spend less and get a lot more. Secondly, there's obviously continuing work on a lot of different infrastructure projects in the Cebu region. And that's really important in driving property prices. You're seeing work on bridges, improved infrastructure, obviously the opening of the international terminal of Cebu Mactan International Airport in 2019 was a huge thing, and that'll be important once international travel resumes. So all experts remain very bullish on the outlook for Cebu residential property, including the condominium sector here. Those considering Philippine condominium investment in 2021 really need to think long-term about what their goals are and what their strategy is. Prior to 2020, home prices across the board in the Philippines had been increasing, and this was a trend that was supported by local demand. Many experts believe that once the Philippines successfully combats the COVID-19 pandemic and life starts to return back to normal, the economy will really bounce back strongly. There are a few different estimates right now in terms of what that timeline will look like and what that growth pattern will look like. The BSP has said it envisions a scenario where GDP can increase by as much as 10% next year. First Metro Investment Corporation, the investment banking arm of Metro Bank Group, says they expect GDP growth to hit 6 to 7% by 2023 with a longer recovery. And really all experts believe that by 2023, the Philippine GDP recovery and the per capita numbers will resume their upward momentum. Now that's really important because you look at what's happening in all of the Philippines, and it's that there's real demand for real estate and there's real demand for residential real estate. And that will help refuel, I guess, the condominium market boom that we saw in the country during the past 3 or 4 years. It's also important to note that the Philippines hasn't reached condominium oversupply levels that you're seeing in Thailand, Bangkok in particular, as well as Malaysia and KL. This means that it's going to be far easier to rent out units, hopefully, and it'll be far easier to find sellers for units on the open market down the road. Whereas elsewhere in Southeast Asia, the competition's really fierce and it's going to make it more difficult to do both of those things. It remains fairly easy for many investors to realize their capital returns or their rental returns or however they want to spin their property investment out. So while in the short term, things may not be as optimistic or they might not be as rosy as they had been in the past, Philippine condo investment this year can still make sense as long as you are understanding the market and where it's heading and you're understanding where demand is going to be moving forward. As long as you have a good idea of that, I think Philippine condominium investment in 2021 can still be a lucrative proposition. That being said, of course, the country still needs to overcome the COVID-19 pandemic and it still needs to get the economy back on track. For Interesting Asia, I'm Cheyenne Hollis, and we'll see you next time.